Hello there. Great to hear that everyone is so excited, and I get so great response on the trading plan video series. So I'm gonna keep on making them, posting them to YouTube, and sharing them with you guys on Instagram as well. I'm also working on a Tumblr account where I can actually write down what I say and what I talk about. So once you see the short videos on Instagram, you can also watch the extended video on YouTube. And when you are trading yourself and you wanna look up what was the theory about a certain indicator or whatever, go to my Tumblr that's in the making right now, and maybe that can help you as well. So we got images, video, text, Twitter as well, don't forget. So I'm here to help, guys. So part 4, this is I think the most interesting part this far, because now are actually going to talk about where do we enter, where do we exit. An exit can be a take profit, but sometimes it's a stop loss as well. How do I manage my risk? Do I go in full blown in the beginning, or do I add a certain position, and every move or everything that happens will give me some confidence to add to that move? Am I not feeling that good about a trade? Do I maybe have to scale out of that trade, or do I think I can scale out because I want to take my 1, 2, 3 profit? You know, you don't have to take all in one if you think there is a little more room left to your trade. Lot size, of course, is one of the variables in determining your risk. If you want to risk 100 to make 600, there's a great risk reward, of course, but it's all about the lot size that determines. It's not, you don't think about your lot size and the money you want to make. Is what you see on the charts. If you think this is a nice entry, there is a exit, and there's a profit, your lot size will become that of where the stop loss is. So you first look at the charts, and then you can see where to put your how big your lot can be in this case. I think the core of everything around managing a trade, once you get in, you know, in the previous trainings we talked about indicators, we talked about price action, we talked about setting goals so you know what you're doing, what you're looking for in the market, what you're actually trading. Those are all important things, but in the end it's all about if you're right, then go for it. If you're wrong, make sure you're out quickly, and once you're right, try to ride that trade as long as you can to make a high return. The first thing I want to look into you guys with is where to enter. Now there are a million ways, of course, to enter. You can just hit buy, and you know, if you're lucky, at the end of the day you're in a profit, or you can hit sell. It's the same thing. But you know, let's look at it a little bit from an intelligent standpoint. I got two obvious ways to enter a trade, on the left and on the right. When you're a swing trader, you wait for a pullback or a touch of a certain trend line. Here you add or you get in, then you ride it, then you make sure you get in again, make sure you get in again. You know, these are all possibilities. Never get it on a high, but wait for a nice pullback. If the pullback doesn't come further than the previous low, or if it touches a trend line like this, that's great. Enter and go. And you know, this is a pretty obvious move. If you had this one in the US dollar, Singapore dollar, then you had a really nice move. Another way is if you are looking at a chart that's moving in a range, wait for a breakout, because that's the moment where price starts trading, starts trending again. When you enter over here, you can see price comes back until you know, it takes a very long time for your position to get a lot of profit. So some people say, I'm not trading sideways markets, I want to be there when there is a trend again. So let's look at this one a little closer. I think this was the chart that I draw the picture in the previous slide. When you look at those touches over here, for example, and over here, for example, in this case, in the previous picture I drew a trend line, which the touches pointed out pretty obviously. You can see you can use a moving average as well. In this case, it doesn't matter you know, it depends on the strategy you use. It's not wrong, it's not right. It's, you know, some people say I trade off the moving average, great strategy. Around here maybe you said the moving average broke, so I'm out. Or maybe you said I'm still in because this previous low is still intact and you had a little more room to the upside. This double top would be a place to leave this trade, I think. I know for a fact that Shopify, this one was trading actually in a very long sideways move, and this was the area where price eventually broke out. Over here even it got the retest, moved sideways for a little bit and then took off until the 43s even, so this was a pretty nice move. 10 points, so there was a great way if you to make money from this this breakout, so another nice example. Then it's important to determine your lot size. As you can see over here, we are starting to see some higher highs here and some higher lows. Not really, but you know, this could be an indication of a potential reversal. You know, I point out every time we also need some information of a clear break of the moving average. We need to see more higher highs, more lower lows, divergence on the RSI, a pattern on the MACD, whatever. I don't know what your strategy is, but all in all, if you see a nice move that you wanna enter, it doesn't matter what strategy you have. This great tool from TradingView can give you a great view on what you can be making or what you can lose. Well, I pointed out this is a tool from a certain broker I use sometimes. I pointed out that I want to get in on the price of 99.4475. Well, that should be around here. As you can see here, this would be my entry. I want my stop below these lows, because once those get broken, my plan doesn't work anymore, because we start to see lower lows. And of course this price on 98.66, that would be let me see, oh, that's the stop loss, yeah, that I pointed out. So once this one starts riding, I want to take my profit at a 1.03 risk reward, for example. This would be a nice take profit 1, take profit 2, and here maybe take profit 3. So these are all to me very, I hope I can show you guys how I look at risk reward. If I am willing to lose 760 euros when my plan doesn't work, well, that's to some people that's a lot of money, to some people that's okay. If you have an account of $1,000 or euros, then this is way too big. If you have an account of, let's say, 20k or something, this would be a nice setup. So your risk is 765. Once this one rides all the way up, I'm not counting in all the add-on positions you can put in here, or you know, a lot of things can happen along the way. But once this reaches my ultimate goal, my ultimate target, we can see a 3,433 euros in profit. So this shows you guys you can be wrong in this trade 4 times and still be on the winning side. I think this is a nice setup. Really nice example of your risk, your reward in a nice setup. Of course, this is how you look at how you open your trade. You don't, after you know this, if you say I want to lose 100, then and you enter on here, then choose a lot size that makes your stop loss just touch the 100, and the profit that you will be making, well, that's nice to know as well. That would be around 450, I think, in that case. But the entry and the exit, the stop loss, this level will tell you how big your lot can be. And the profit, don't get greedy, guys. That's a secondary thing. Okay, let's move on to the next one. Stop losses. Oh my God, I hate that. I hate it, and everybody else in the trading business hates it. I have to be honest. I sometimes still end up with positions. I for some reason I think it would have went on different, but you know, take those losses, guys. You take 100 loss and go on to the next one where you can make a 500, and just, you know, what's 100 to make another 500? So just I'll do a certain thing on trading psychology. Maybe it helps myself for my stop loss issues sometimes, but it's very important. This is a nice example. we see the market's moving lower, then making a high, pulls back, we see a higher low, so this could have triggered your attention. Once the previous high broke, that was around here, price really started going off and we have a nice trade. This would be your entry. This would be, of course, your stop loss, because once this low gets broken, you want to be out. So that's the way I look at a stop loss. And of course, there was bigger reward than the risk. So this is a trade. Stop losses can also be set on. Well, let's see if we can find an example on the chart. If you master technical analysis, you would be looking at a pattern like this. Where you come off a nice uptrend, market starts consolidating over here, so I think this would be a nice point to exit your trade. The moving average gets tested a couple of times. Here it gets broken, so this could be a trigger to leave this trade. I think it did not yet broke this previous low, so maybe you would still be in this trade. A second attempt, we see a double top. And of course, over here, once we broke the level, you should have gone out. Another clue on this chart is that we see a high, and we see another high, and a third high, but we were also seeing the known divergence pattern over here. So our divergence on the RSI, bad news. In this case, if you're riding the uptrend, break of the moving average, bad news again. A break of the previous low, which was around this area. Over here it broke the low, so you would have been out. Now I hear you guys thinking, yeah, but what if I kept the trade? It would have turned around and I had some more profit. That's right, we never pick tops, we never pick bottoms. You have to go for the safe money. This would be a signal to leave, because eventually this could have happened as well, and we do not want to get in these kinds of moves. So it's a funny thing. I see divergence on here moving the other side around, so maybe we are witnessing a nice reversal again, but that's something for another video. So next one, you take profit. Of course, you choose your entry, you determine your lot size, your risk reward. Of course, you have to know before you open the trade where to get out to save your capital. But the most fun part to get out of a trade is once everything works out and we are actually going to take profit. Oh, sorry. So what happens here? This is a quick example I found. Once this high gets broken around here, we start to see a we see a small higher low. This could be another higher high. We see a nice move to the upside. This could be a certain supply zone where we should want to take our profit. Maybe we take our first profit over here, re-enter, take a second profit over there. A lot of different scenarios. Nothing's wrong, nothing's right, but it's up to you how you want to trade this. But once this one breaks, we got a signal to go, because we are seeing a nice price action pattern to trade. We enter on a break, we ride it, and we take our profit over here. Why do we take our profit over here? Because we see in this case a supply zone, or we see a certain resistance, or we see a trend line, or whatever we see on the chart. There has to be something where we can see that we want to get out of this trade. And of course, we want to get out once we're in profit. We're not going to wait it out when it pulls back. If it makes another attempt, sometimes important price areas, they can protect you, but your stop loss should be there, because price doesn't you don't want the price to break that level. The other way around, you have to think the same way in taking profits. Don't cut your profits too early. Don't be glad when it's running here. Take your profit and go home. You know, you can take a part of your profit, like 50%, and then let it ride, take another 50, so you got more out of the one trade. You can re-enter, you can do a lot of things, but this would be a first zone where I would look to maybe take a little profit. This can be another one to take some more profit, and when we zoom out of this picture, there can be a lot more, but for now this is a great example of taking a profit. Taking profit is more than just taking a profit, like running into a resistance or running into a supply zone. Let me this is a great picture, I think. Um, I pointed out this one a couple of slides ago. We want to re-enter, we want to re-enter, we want to re-enter, you know, riding this trend. For now, it is important to also think about, once you re-enter, this position you opened is in profit. Move your stop loss to break even and continue. Same thing here, re-enter, move it to break even, re-enter. All those stops, just move them up, move them up, move them up. When you're over here and you don't see the right side of what's coming, you don't know yet if this trend is over. Of course, here as well, moving averages, RSIs, MACDs, you can pull everything up to determine. You know, you have to draw some lines. You know, you have to know where support is, resistance, supply and demand, everything. I know that, but just to point out that this is a way to keep entering in your trades, but also to move your stop loss. So when your take profit is on your stop loss, then you would have moved all your stop losses to this point. We had another rally, a small pullback. Maybe you thought about re-entering, or maybe, you know, would be possible scenario, but you got stopped out over here, and then we came over here, but it wasn't a low looking at this point, so we were still in the trade. Another move, and I think we all hope that this one continued, but it didn't. Price lost momentum, and we saw a small, you know, turnaround in price movement. And once this happens, you can see the strong move. That's very obvious that this happens, because the previous low gets broken and price starts moving off and probably reversed over here. So your take profit would have been on the exit of this one. Then you had right the maximum out of this trade. And since we do not know in trading, we can't look in the future, we were still in for another move. It didn't come, so we got stopped out at exactly the right point. This is a very powerful way to add positions, move your stop losses, and just keep riding the trend until the time is there that an actual reversal is there. So let's move on to the next one and the last one. This is a tricky one. Using a mental stop. Me personally, I think I can read the charts pretty good. Technical analysis, I studied it for a long time. There are certain scenarios where I have to see breaks of lows. I have to see some indicator information. I have to see a lot on the charts before I think this trend is actually exhausted and I'm gonna get out. I look at more information than just a break or just an indicator. So I use a mental stop, which means that if I wake up tomorrow and something terrible happened in the world, a lot of my positions will be protected. Of course, I will take a loss as well, but that's trading. But never ever trade without a loss, a stop loss. That's one thing. I put this picture in it because this is the previous low. Price has been moving up, it comes down. Of course, it broke the moving average. Of course, we are still seeing we are also seeing divergence, so there's a lot going on here where you can ask yourself, shouldn't we have exited this trade? I think this may act as a low as well, so we are in a danger zone right now. You know, trading below the moving average, for some people they say let's get out. That's okay. When this low gets broken as well, in combination with this divergence, in combination with the break, the powerful break of this moving average, also the strong movement on the lower Bollinger Bands, which indicates strong momentum to the downside, I could be in this trade, but once this happens as well, then I should get out. So there is a point in the market in every trade where you should get out. Probably my loss can be pretty big here once this happens. So it's not for everyone, you know. You have to be confident that you read something, you can see something, that this will actually continue, or whatever motivation you have. So let's point it out that this is not for the beginners. You want to play it safe, set your stop loss, and obvious, you know, this low would have been a stop loss, pretty obvious, because this strong move is not for fun. It's because this point got broken, I think. yes, so very important, but always use a mental stop. That's an info. That's one thing I wanna give you guys with. Well, that's the part four, managing your trade. I think this was a great video because this goes actually in how to manage a trade, how to enter, how to exit, why, how. I think everything's starting to come together, which of course is great. So yeah, well, see you next week. Bye.